Hello and welcome to NDTV Profit. You're watching Earnings Edge, and my guest today is K Krithivasan, who is the MD and CEO of TCS. Krithi, thank you very much for joining us.
Thank you.
On NDTV Profit.
Thank you for having me.
Last couple of quarters, there's a huge turmoil which is happening within the sector, IT sector. And at the end of Q4, you said that you hope that by Q1, you get much more clarity on the entire geopolitical environment, how the sector is going to do. Do you have that clarity today?
I won't say that. See, if you remember, towards the first week of April when we met, I did tell you that there is a heightened amount of uncertainty, and that has continued throughout the quarter. And I think till all the trade discussions are concluded, that clarity will not emerge. In fact, the current uncertainty is primarily around trade discussions, and to some extent around the big beautiful bill. Like I think at least the bill has been passed, that has given some visibility on what is the impact on some of the sectors, particularly the healthcare. But the what happens to trade discussions, that will determine what happens in the consumer business and other sectors, and those sectors that are more import dependent.
There's a statement in your earnings today that you saw contraction of demand in Q1. And I want to just juxtapose that to what's happening in the US. You have labor market which is holding up. You have growth which is there in the US. Of course, there is no Fed rate cut coming in because of the uncertainty of tariff which is there. But the market is holding up with respect to growth and earnings as well to some extent, and labor especially. And still you are saying that there is a demand contraction. So is it happening from US, or the demand contraction is happening in the rest of the world?
You see, like if you first look at the headline numbers, our US grew a little bit, like so marginally on a Q-on-Q basis. We had a negative growth, so a small negative growth in UK and a bigger negative growth coming in Europe. And of course, everything is to some extent interrelated. Now, if you look at the demand contraction, okay, while there is a moderation almost in all sectors, there are some sectors, like particularly the consumer business, okay, which is more heavily impacted almost across the globe. But whereas banking, you see, banking is slight growth we witnessed in North America as well as in UK, but Europe we had a bigger degrowth. So some sectors are universally impacted. If you take manufacturing, auto is impacted, but industrial and aerospace we have done well. The tech sector we have done well, but telcos have not done well. So it varies, but it's very difficult to call out which sector is doing better. Like I said, there has been a moderation in the demand across all sectors.
And how do you see the healthcare? Because you spoke about the big beautiful bill. How will it pan out for you?
Healthcare last quarter, the healthcare itself, essentially the payer segment, it had a small degrowth. The life sciences did better. Medtech did better, but pharma didn't do well. So that's broadly the commentary.
How do you see the pipeline? Because you did a total contract value of $9.4 billion in Q1, and it's coming on the back of around over $12 billion in Q4.
That's right.
I heard in your call that it's not fair to compare both the TCVs because both are different characters. But how do you look at the pipeline when you go into FY26?
Overall, the pipeline remains strong. Like while we did declare, still it's a very healthy and robust order book. We've been able to replenish and grow the order book even further. Like our order book stands at, pipeline is one of the highest in the recent quarters. And our qualified pipeline also is very good. When I say qualified, it's a late stage pipeline. That's also quite strong.
So when you say late stage, means it's not part of $9.4 billion. It's something which will come in the next quarter.
Which has advanced quite well. See, like typically we characterize pipeline in multiple stages. Some of them are very early discussions, some of them are late stage discussion which can conclude, which has a higher probability of concluding. in our favor.
And you see a good, healthy pipeline that will get concluded in the next quarter, by the next quarter?
We are looking at a good pipeline, so which means that we are looking at a healthy order book closure in next quarter as well.
And which are the sectors it is coming from, just to get an idea of where the order and demand is coming in from?
That I would say is more well spread across both, in fact, both in terms of geography as well as sector. We are anticipating some good pipeline, that momentum definitely in banking. In fact, we are also seeing good pipeline in CMI, which has been dormant for some time. So it is quite well spread now.
How do you look at the year? Because you said that in Q4, on a quarter-to-quarter basis, your constant currency revenues fell by 3.3%, 0.5%.
Q1, you mean?
In volume.
In Q1.
In Q1. And that was primarily because 0.5% came from international.
Negative 0.5% came from it.
And 2.8% from the BSNL order.
That's right.
But you also said that in FY26, my international revenues will be growth will be more than what I have done in FY25.
Yes, it is we've been growing with albeit a small number in FY25. So that momentum continues, and we are confident. When I say confident, we are very hopeful of a even modest revenue in international revenue in the coming quarters, which would give us at least on international revenue year-on-year comparison basis, a better international revenue in 26 compared to 25.
You know, you had the BSNL order which tapered down in Q1. Now you have another BSNL order which may start in Q2 and maybe peaking towards the end of the financial year. There was an expectation that when the BSNL order tapers down, it will bring in or increase the margins for you. Did you miscalculate hiring in end of Q4, Q1 because of the demand situation?
I won't call it miscalculate. We hired in anticipation of higher demand in Q1. Since the demand did not materialize, we had a higher labor cost compared to the demand or revenue. But definitely it provides us an opportunity to tweak it in Q2, like how much we hire from the lateral market, because we have that capacity with us. We should be able to utilize that capacity for additional demand that might come in Q2.
Mm-hmm. Just to get a clarification, did you, it was primarily because of deferment of the orders, or is it because orders didn't come through at all?
It is more two things, like it's not nothing more, the impact is probably more on the work that we're already executing. Okay, the work that we're executing, some places the work was paused, there was a scope reduction. That caused and there were some places the orders which we were expecting got delayed. But I would say the bigger impact was where the ongoing work was paused or delayed, or some places the scope was reduced. So that caused the reduction, because that happened pretty swiftly, so that we are not able to anticipate how much of additional people need.
How sensitive is the client today with respect to spends? I think everything boils down to that.
They are sensitive because...
Is it at a peak now as compared to last 4 quarters?
I would say they are also trying to manage their budget on a quarterly basis. So when they realize that their quarterly numbers or targets are not being met, or they see future uncertainty, they would like to control their expenses now. So there's that amount of sensitivity and interest to act very fast.
And is that bringing in opportunity for you in terms of cost, rationalization, vendor consolidation?
It does bring in opportunity. That's the reason. Otherwise, if we had only negatives, we will have a much deeper problem. It does get offset by some positive new opportunities, but how much of these opportunities, how much is it able to offset the negatives is a question. Like if you are not able to fully offset, that's what happened this quarter. We had a marginal degrowth.
BFSI is one segment which has been mixed in some way, right, for you. It's seeing some bit of softness there in the US for you. I remember in the last 2 quarters we've been talking about how GCC is going to change or disrupt the model for IT companies. How is it looking for you?
See, GCC.
Have you changed the view on that? Is GCC having any impact at all?
It is having some impact. Like it is having some impact. We find that some work that otherwise we could have probably diverted to us, it does go to GCC. Not necessarily only in BFSI, in many sectors. Okay, but that is one portion of the. But as I said, the main reason still is the pause in demand or reduction in scope. That is the primary reason. But GCCs do have an impact. I am not saying GCCs don't have an impact.
How is AI also helping you in consolidating or vendor consolidation and orders? We've been hearing about the fact that AI is now inbuilt in almost all orders.
That's correct.
And you've been saying that if there is a way that you can provide, even if it is going to cannibalize your revenue, you will go ahead and do it. How is that helping you in expanding your base?
So it helps you in providing better cost optimal solution to our customers, and it gives them better outcome. And while there could be a overall revenue deflation, but it can help in market share gains, so that offsetting the whatever reduction you get in individual projects. So we do see that it will be in the long term, it will improve the overall. I think it can even improve the margin because we will be able to achieve better productivity in such programs.
And our
revenues as well.
And clients are telling you that, are they putting a percentage saying that this is the kind of percentage productivity gain I need as part of
Depending on the, there are some
clients.
Is this
discussions which is
there are some clients that demand a minimum productivity improvement. There are some places where we go proactively and say, this is, in fact, we have gone some places where we went proactively and offered some gains to them, seeing what we are able to deliver. In fact, they consolidated a larger book of work with us because they found what we were committing and what we are delivering was quite attractive.
I'm coming to an end of my interview, but I have a final question for you. Going into FY26, now that you have 1 quarter of revenue behind you, what do you see are the big headwinds for you, and what are the tailwinds for you?
See, the headwind is a continuing uncertainty. The uncertainty continues, that would be the headwind. Okay. The tailwind is everything else. One, our strong order book, the pent-up demand in technology, like many of the customers have not spent big time in over the period of time, be it in cloud, be it in AI, be it in modernization, and of course in cost optimization as well, where there are vendor consolidation opportunities. So once there is a better clarity, I think the tailwinds would outweigh the headwind.
And which means that you will be able to maintain the current level of margins going into...
That's our aspiration. Like we've been talking about a 26 to 28% margin as our aspiration band. We'll continue to drive towards.
Despite the fact that the wage hike for this year hasn't been announced yet, and you plan to hire some more.
As I said, no, that will always be our aspiration band. We will keep trying multiple levers to reach that band.
And attrition is not a worry for you?
See, it is like Milind mentioned in the other meeting, it is slightly above our comfort zone. So we have to increase our employee engagement to bring it within our comfort zone.
Krithi, it was a pleasure talking to you today. Thank you very much.
Always. Thank you, always.